Hello, YouTube. The S&P remains over 480, which is good. But on Wednesday, we face our final boss, or Jerome Powell, when the FOMC decides what they're going to do with interest rates. Is the stock market going to go higher for longer, or are interest rates going to go higher for longer? That'll be very important. And the number one data point for this week is going to be at 2 o'clock and 2:30 on Wednesday. And then we also have non-farm payroll coming out on Friday. As of right now, we're expecting a pause from the Fed. And the reason why this is so important is because of this next slide, where the majority of the declines in these bear markets occurred after the Fed's pivot. So what do we not want? We don't want to see a Fed pivot. We want to see a pause. And right now, there's a 52% chance for March after Jerome Powell talks. I want to see what that number is going to be because, frankly, it's really important for me. I would like for us to pause for a little bit longer. And keeping that in mind, this weekend's theme is going to be very similar to previous weeks, where we're going to tell you to remain patient. Why? Otherwise, your money might get transferred from you. And what this really means is that we want to be receptive to the idea that we could be repeating what happened in 2021, where we go higher for 11 months and for 50%, as long as those higher lows and higher highs hold. We have some updated numbers for you this weekend in terms of including support and resistance. And I have those identified here, so just make sure you watch. We'll go through all of those shortly. If we move forward here to the NASDAQ, we have updated numbers as well. And as I noted, we do have those NASDAQ numbers here. What's really important as well is that with earnings coming out this week, let me just make sure I show that next slide. With earnings coming out from, this is the most important week, 20% of the S&P 500 reports this week. Microsoft, AMD, Alphabet, Amazon, Apple, Meta. We're going to go through and look at the charts a little bit later. And what I want to preview was just that forward guidance really matters. So when Jerome Powell gave forward guidance, the market rallied incredibly. Intel said, hey, maybe not so fast. It went down a lot. Looking over here to Tesla, same thing. So forward guidance really matters right now. And there is a pattern that I'm noticing here on QQQ, which is a pattern of, let me just see if I can get these to come back here. Nope. All right. So we got these patterns, this pattern here, which is 3 full candles in a row. And this is important because at best, what it showed us is that there's a period where we're going to have a little bit of indigestion, which means maybe we go sideways. And like I mentioned, we do have updated numbers for support and resistance. And as we look forward to what is actually working so far this year, it's pretty incredible, to be honest. We have chips. Number one gainer, now only up by 7%. Then we got the 10-year note, volatility. Then we got mega caps. We got the NASDAQ. We got the S&P. We got the dollar. We got the Dow now joining the green team. And we got the New York Stock Exchange joining the green team. RSP, ETH, BTC, all down by less than 1%. And the losers are the Russell and ARK. So there you go. That's the data for this week. And then again, we do have those key highlights I'm going to talk about. There's a lot going on this week, so if you wouldn't mind, before we go further, please considering smashing that thumbs up. And if you're new here, we do publish stock market videos nearly every single day. Maybe you want to consider subscribing to the channel. Thank you ahead of time. All right, so clearly there's a lot going on. Let's just make sure we got through all the rest of this important data. So Tuesday really matters, Thursday really matters, but don't fret. I already went through and summarized all of those dates right here, including what the top 5 important data points for the month will be. So just watch. I will walk you through everything you need to know. With the pattern we noted on QQQ, this will be important because fear and greed has been very reliable in terms of a cycle. We go up, we go down, we go up, we go down, we go up. Is it time to go down? Well, it could be. We know that we do sell extreme greed, right? We were greedy a year ago, extremely greedy a month ago, greedy a week ago. We're greedy now, extremely greedy, sorry. Is that the recipe for a good, strong, healthy market? Well, we'll find out, right? Clearly, we're going to find out. So there's a big challenge this week. And what I really want to think about is what we talked about 2 weekends ago. So what we talked about was that either the Dow Jones is going to be the template for the S&P 500, where we just punch to a new high, which the S&P just did. And that would be, we could go higher for 11 months, like we did from November 2020, all the way through here to September. And that gave us a rally of 50%. I gave you the updated numbers here. And man, this is pretty incredible. We also went through on Friday, or I think on Thursday, and we showed the math where 90% of the time the market actually goes higher after making a new bull market. So I'll try to get that over here on the other screen, and then we'll come back and look at that one right now. So the reason why this is notable is just because the hit ratio is so good. 9 times out of 10, 1 year later, after making a new all-time high, man, where are we? Well, we're higher. 90% of the time, it's green. The average return is 16%. A 16% rally would take us to, where would that take us to? I think that would take us to, man, I think it was 5,600. So 5,600 would be the number. And that's incredible. So what we want to think about is whether from peak to trough, it's 2000, 2002, then 2007. So like, unless we think we're going into a lost decade, which, hey, we can all argue about that. We can debate it. That would be the reason why we think we're going to go down. So if it's not 2000, when it's over and the stock market decides, well, Jerome Powell might be telling us that, hey, it's time for us to go like a lot higher. I don't know for sure, but what I'm trying to just look at is the fact of we try to think about history. So if we now go back to here, I just want to think about whether or not this template that I laid out at the end of last year at December 30th is actually playing out. I mentioned that the template for 2024 is simple. What is it? Don't fight the Fed. The Fed is saying that we're done hiking. It's a matter of when we're going to cut. And like I just showed you, we actually might not want the Fed to cut. What do we want? We want an extended pause, at least maybe for a year, right? That would just be fantastic. Market can go higher. We get the election out of the way. And then we find out whether or not there's a reckoning going into 2025. So that appears like it's working. Jerome Powell is going to tell us on Wednesday whether or not we should continue to not fight the Fed, or if maybe they flip-flopped. Pause or bullish. Pivot or a cut is to be determined. So we just showed you, right? Pause is bullish. A pivot, I don't know, right? The odds are not good on that one. And then blue skies are bullish. So what do we have? SMH and blue sky territory, XLK, QQQ, and SPY. Where are they? Well, they're all in blue sky territory. And what's so interesting here is that I mentioned that SMH or chips lead mega caps, and then technology leads the S&P 500. So what do we have? Well, in order, we've got SMH, second biggest gainer in terms of ETFs for stocks, SMH, XLK, QQQ, SPY, and then DIA, and then NYA. Well, that's exactly what we would see for a bull market. Oh, that's interesting. Yeah. And then just looking at the 2020 pattern to the 2023 pattern, well, the math lines up too for 5,600. So whether we look at that data point I just looked at, or we look at this one, it appears like the market could be set for a really good year. And a lot of people don't believe it. So if we think about what could happen in the short term, well, we could clearly get a corrective wave like we have here. We go sideways for an extended number of months. And to make this so simple, you can't ignore it. What this basically means is scenario one is that the Dow Jones is the template where, as of right now, we're set to close in a blue sky territory on SPY and on QQQ. Hey, well, new all-time high in first attempt. Great. That means that we're just going to do what I just showed. Higher lows and higher highs for potentially up to 11 months. That would be a mega rally. The flip side is that we could do what SMH, XLK already did, where they make a new all-time high, and then they have to back off for a number of months, 1, 2, 3 months. How long did we do that for here on QQQ? Well, let's look. From July until November, well, that's July, August, September, October. That's 4 months, right? Call it 3, 4 months. Oh, so that's like matching up too. Yep. So 1, 2, 3, 4 months. Now we start reversing. It took 6 months from all-time high to all-time high back test. And what I would note here on the Dow was that the Dow did put in a back test, but it only took 1 month. So new all-time high back test on the first month, or basically holding it on the first attempt. This one needed a second run, right? All the way up, back down to support, and then launch back up to go to a new high with a back test. The same thing happened on SMH and on XLK. I'm not sure if I have XLK handy, so let's just pop over to it here. XLK, 1 month. So what do we note? Well, exact same thing. New all-time high, back off for 3 months, and then we go to that new all-time high. Oh, okay. So this is like looking constructively bullish. Yes. On the flip side, we would do what Bitcoin did. And Bitcoin had a huge, massive failed breakout, and then it just tanked, right? Massive dump, 70 down to roughly 30K, 70K down to 15K, and now to be determined. I'm not sure what's going to happen on this one. So S&P did the same thing. Failed breakouts have led to moves lower before. It happened in 2020, later in 2020, happened in late 2021, and then in 2022. So the only way that that can happen now is if we get an incredible power slam into the last calendar day of the month, which is basically when Jerome Powell is going to be talking. So when I say it's Jerome versus the market, right? Jerome Powell versus the stock market, he's either going to say, whoa, 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 right? We got a strong economy. We got inflation, which is coming down closer to target, but not quite there. Or he's going to take a victory lap. I'm not in the business of trying to say what Jerome Powell is going to do. I'm in the business of trying to react to what he says. So that's what I really want to go through in the last couple of minutes of the show, because frankly, all we can do is prepare. So there's one thing called the news versus the reaction to the news. And that's what I would like to focus on here. So I think I'm telling you a very simple story. And like I mentioned, I will go through those charts for the S&P and the mega caps here in a few more minutes. We'll go through them one by one and just tell you what they're looking like going into earnings. But please just bear with me as I try to give you a little bit more information here. So again, please be patient. We've been saying this over and over. Just because the market's overbought does not mean it needs to go down. What it means is that it's overbought. So there's two ways we can work off overbought conditions. We can go sideways, and then eventually we can go higher, or we can go down. Those are the two scenarios. Going sideways can burn off overbought indicators too. So what does that mean? Have the patience to wait for the pattern we've been talking about, which is the lower lows on the monthly. And right now, those numbers are very easy for us to remember because we have them right here. It's 466 on the SPY, and it's going to be, I didn't update that number properly. That's going to be 395 here on QQQ. So it's that simple. If we're over those numbers, bullish. If we're under them, bearish. What I am noticing here when I look at what is green year to date, I just told you, if it's a bull market, this is what we would expect. These two things are the ones that throw a bit of a monkey wrench into this, where we have the dollar up, the 10-year note up, and up by 7%, and we have VIX up. The way I read this is maybe not correct, but here's how I'm reading it. It's U.S. exceptionalism, where they want American chips, American bonds, but they want to buy some insurance, and the dollar's also still king. That's how I'm reading it. The way I would confirm that is by seeing IWM actually joining the green team and RSP joining the green team. These two tickers right here. ARK is not really the best gauge for the entire market, but it's pretty notable. It's down by 12%. I'll say that, right? Yikes. And then finally here, if we think about what could happen into the first half and second half of the week, if we just go here, going to SPY and QQQ, trying to get a little bit of context. Remember, closing at or near the high of the week just implies we're probably going to get upside momentum. So what would that mean? Well, if into the first half of the week, we go and form a higher high, and then we close out the monthly candle. Remember, we close the monthly candle out on Wednesday, and we just talked about the potential for a Bitcoin monthly fail breakout. We go higher, and then we close lower. What would that do? Well, that would probably create a failed monthly breakout. Oh, that seems like really important. Yes, it does. So we're likely going to get a higher high. The question is, will it hold? I don't know. I don't know, right? That's why I'm just telling you what I'm watching for as a reaction. So second thing here would be QQQ. Well, QQQ was a doji. So this one's not closing at the high of the week, though, even though it's closing green. Gap's been filled here, but it's looking a little bit exhaustive. I'm not going to lie. Then we pop over here to that daily chart and we note that, well, yeah, if we form one higher high, two higher high, three higher high, or a staircase higher, 1, 2, 3, we'll make it yellow here so it's a little bit easier to see. What do we know? Well, 1, 2, 3. On the third wave is where we get that eventual dip, where we start going sideways. Oh, so we're like maybe in a little bit of trouble. Maybe, right? There's no trouble yet. Final thing I'll note here is that we've now filled the first hole here on QQQ, but we have another hole here, or gaps. So if we're going to start a corrective wave, we even got gaps down here to 378. I'm not saying these have to fill. I'm just saying I'm trying to be very mindful of them, because if we do go down to here, that's our previous all-time high. That corresponds with the high that we formed in late 2021. So if we start filling all the gaps, well, it just means we're going to be below the 2021 high, and then we can't afford to really lose the 50 MA. Otherwise, we're going to be going down more. So what that means is, if this high corresponds with this high, it means we're going to be going into a sideways corrective wave where we marginally go lower, and then maybe we go higher after that. So just be mindful of it, because, again, we normally take the staircase up and the elevator down. So wrap it all together for me, because we're at about the 15-minute mark, and I want this video to be easy enough to digest and rewatch if needed. we have really important data going into the close of the monthly candle. And then we got the close and the open. So the most important data point is going to happen on the last calendar day of the month. I'll be watching it. I'll be doing a video on Wednesday. Please watch that one. But just note, how we close the month, though, does not mean that's how we're going to continue into February. As we go to the end of the week, we're going to have the second most important data point coming out. For me, that's going to be non-farm payroll and unemployment, basically talking about the trajectory for the Fed. And then just to make sure we get a sandwich here, we've got Microsoft, AMD, and Google on Tuesday, and then Apple, Amazon, and Meta on Thursday. And as we look at those charts, the reason why this matters is because the NASDAQ or QQQ is made up largely of these stocks. So if we can understand which ones are strong and which ones are weak, that can tell us what we should be expecting from these stocks going into earnings. So I think a lot of it's going to matter on forward guidance, as we just talked about. Microsoft can afford to slide multiple percent and still be over in a blue sky territory. Microsoft looks like it is good. I'm going to give that one a check mark. Why? It would have to drop like, I don't know, 7-8% just to lose the 2023 high, not even counting its 2021 high. This stock is strong. It's the biggest one in the entire market now, over $3 trillion. Apple is, if, again, expectations are quite low, the stock is not really rallying into earnings either. Arguably, it's going sideways, which means that if it can deliver something with that VR headset, maybe it goes higher. There is some risk of it going lower because of the China exposure. And frankly, Apple's one that I'm a little bit less sure about. This one I would give a question mark. It's likely going to surprise us. As the bar set is the lowest bar set is going to be for Apple, but it's also a really big stock. It really matters. Google here is at a pivotal point. It's either going to pass or reject off this all-time high. So the Dow Jones was a template for us to just power up and go higher. If it matches XLK and QQQ and Microsoft, well, probably down and then back up. So this one here, again, not sure about. I think Google's going to do well. I'm not confident one way or the other here. Big move up or big move down is what I'm expecting. Amazon still has to rally back up to its all-time highs. This is the laggard out of the mega caps as it relates going back here to its all-time high. So Amazon does have strong support building up. It's starting to go up, and I would expect it to go higher. The one part that's missing here is volume. So as we go higher, people are less enthusiastic to hit that buy button on Amazon. So what are they going to do when earnings shake out? NVIDIA, incredibly strong. Doesn't report earnings right away. Man, this is a leader. Look at it. Strong, sexy. Man, it just wants to go up. Meta, a similar note to Google, where it's now just poking back over its previous all-time high. I am unsure whether it's going to power up and go into blue skies and hold it, or if a back test will be required. It could slam down more than 10% and still be on a monthly higher low, and then maybe carve out a sideways action before going up. Finally, Meta, probably getting kicked out of the Magnificent Seven. So what does that mean? The stock looks bad. Head and shoulders, well, we can see that here. Head and shoulders, knees and toes, below the 50, looks not so good. So instead, let's talk about AMD because they report earnings this week. Well, AMD is nicely over its previous all-time high. It's not as big as Tesla. It's not a trillion-dollar company, but it's definitely a company that people are focusing on right now. And ironically, Tesla mentioned that they're going to be buying AMD chips for their AI push. So there you go. That's the weekend deep dive. If you want to go back and watch the 2023 template, that's now queued up on the left-hand side. If not, come hang out with me on Monday at 9 a.m. I'm going to be streaming live for the Monday Open, and I would love to see you there. If not, thank you so much for your support.